Batteries and battery minerals on the ASX are still a hot topic. We're looking at the top 6 performers on the ASX that are either commodity miners themselves or supplying directly into the electric vehicle and supply chain of battery manufacturing. This is Final Market Points, where we connect the leading market themes and the top performing companies for better trading. You can like the video to support the channel, click subscribe for updates, or comment below to let us know how you're getting along with battery minerals. On the chart on the left-hand side, we've got Novonix NVX, which has been one of the best performers. We've seen volatility contraction patterns and good, strong, stellar runs from this, including Hight and Tight Flag breakouts that have really got this to be one of the best performers over the year. They fall in to be 4th position this month's performance, but we're going to have a look at the 6th best performer to get this thing rolling. Looking at CDT, lower capitalized company, looking at this trading 1.6 cents back in October. Good, strong volume breakout early October as it starts to climb that wall and shoot up to 3.6 cents throughout November with solid volume. This is what we're looking at from a Hight Tight Flag perspective. We want to see a 100% rise, which we've definitely seen. We want to see consolidation in that top third, definitely over the top half of that flag pole, that rally, that fast rally. We're seeing that at the moment, and we're seeing reduced volume as we're coming into that consolidation period. We're not seeing heavy selling into it. We're seeing it stabilize and really just hold its way in its congestion. What we want to see from a Hight Tight Flag is it to pop and break out and rally higher. As the theory goes, measuring rule from Thomas Bolkowski, we're seeing this as 100% to 75 to 100% of the flagpole from the breakout point to see it skyrocket back up. That's what they look for. And from a small and mid-cap miner on the ASX, the chances of this happening are very strong, especially when they're coming from a strong theme. That's what we're consistently doing on Final Market Points, is looking at those strong themes, because statistically, when we want to see a pattern breakout, we see it far more likely to come from one who's got other peers and companies in the same thematic and running in the same direction. You can click on the link in the description below to learn more about Hight and Tight Flags. We're moving on up from moving to see number 6. We're going to number 5, and we're going to have a look at BUX, Buxton Resources. Surfaced this one before because it does run in fits and spurts. It has running in a fit and spurt at the moment. It's coming from 6 cents to getting over 12, and then sideways congestion. Love to say it's a Hight and Tight Flag, but not looking likely, as it is a bit too wild for that congestion. Do see number 4, NVX. We've got 46% gain for the month. You can see this. We've surfaced this a few times because of its consistent rallies, but it is still breaking out from $5 to $10. There we go. We're going to classify this as a Hight and Tight Flag. The congestion here has been more than 75% rally. If that's a congestion, it's only 4 or 5 days before it breaks out and starts running again. This is not a slow mover. This one gathers no moss because NVX just keeps roaring ahead, 46% for the month. But if you want to learn more about the volatility contraction pattern that it's traded out of here, you can click on the link in the description below, because that is what really got this one firing again from $3 after that long consolidation, falling back from the highs at $4. So more than a 25% correction. But as it broke out, this is what we saw the volatility contraction lead to. Really interesting pattern to look into there. Next on up is Anson Resources, ASN. Seeing it move from the 8 cents to 16 cents, ticking the box once again, Hight and Tight Flag. We want to see it consolidate here. Ideally, we're looking around 2 weeks and then breaking out with good, strong volume on a breakout. Ideally, that'd be a good, strong candle, but still keeping around 16 cents. So we can build this flagpole on top of it, say another 8 cents, and look for a target around 24. That's following Thomas Bolkowski's measure rule, but a pattern that we really do like to apply small mid-cap miners on the ASX. LPD becomes the next best performer. 59% gain on the month. Seeing it reach its highs in January and February, come back May, June, troll out the bottom. This one has really had more defined movement of that pattern and the pattern from the battery mineral companies. So we do see it climbing back up July, August, breaking out over the resistance, September, but failing, coming back down, but maintaining the 200-day moving average being the red line. Green line, 50 days already come over with the green cross, but then did throw back into it before 2.5 cents breaking out to 5. Once again, Hight and Tight Flag ticking those boxes, and we're getting congestion around that 10-day period. We really want to see a breakout over that downtrend line, which it may well have done on Friday. That's up to you to determine. But that's LPD being number 2, 59% for the month. Coming on number 1, we've got AVZ. We see AVZ putting on 61% over the last month. This is trolled out from that sideways churn. If we zoom in, we will see as though it had pulled back But in the context of how much it's rallied recently, it does look like this is just a minuscule drop, going from 22 cents down to 16. Big percentages as it comes through this consolidation. We're seeing a breakout over the B wave, or Gary Glover calls that the B wave, running up, but getting some selling pressure coming back down. Notice the 50-day moving average, this green line, stays above the 200-day being that red line. Then climbs on up, using a lot of the 10-day as a bit of support, but really holding that 50-day moving average easily, moving up the steps. Good, strong surge, decent volume on the rise. As it pulls back, we're seeing this consolidation with lower volume. That selling really dries up. Wyckoff theory perspective, it's not getting that selling pressure. The bulls are still in control because the bears can't push it down with strong pressure. See another surge, decent volume from the bulls, bit of a pullback, but only maintaining half of that last rally, climbing up the stairs, what we see. Selling just doesn't really have a huge volume, and then it keeps running. Even pulling back from 36 cents down to 30, doing a little bit of volume, but it does consolidate, and you see the buying come in with the lower wicks here around the 30 cents. These lines that show the lows are much below where it closed because it did maintain and get buying throughout the session. Same thing, breaking out over 36 cents to where it's rallying now, 60 cents. Quick move, 35, 36 cents to 60 cents, and only one day of heavy distribution happening here, but it did manage to turn around and then take all that out in the next week. Ideally, you want to see that be faster, but it's still climbing, still sitting within that pattern. No real huge throwbacks on a time situation, and it is creating what 30 cents to 60 cents creates that high and tight flag. Really critical component for these leading companies on the ASX, because battery minerals are clearly still powering higher. Monthly performances of 61%, 100% for the quarter for AVZ, which we can see on screen at the moment. These are some of the best performers on the ASX and definitely the best for battery minerals this month.